Thames Water's desperate gamble, a £4 billion lifeline from KKR. The UK's largest water supplier, Thames Water, is teetering on the brink. Drowning under a staggering £20 billion debt mountain, the company has embarked on a high-stakes gamble to secure its future. A lifeline potentially worth £4 billion from the formidable private equity giant, KKR. The announcement that KKR has been selected as the preferred partner sends shockwaves through the industry. This move comes as a last-ditch effort to avoid a fate far worse than a hefty financial restructuring, nationalization. The pressure is immense. The deadline for securing this crucial equity funding is the end of June. Failure to do so could plunge the company into a crisis of unprecedented proportions, leaving millions of customers vulnerable and raising serious questions about the future of water management in the UK. The intense competition for a stake in Thames Water underscores the strategic importance of this deal. The bidding war attracted significant interest from several prominent players, reflecting both the potential rewards and inherent risks involved. Bloomberg News reported that Castle, a significant UK-based business water retailer boasting over 250,000 customers, submitted a competing £4 billion bid. Other contenders included CK Infrastructure Holdings, a Hong Kong-based powerhouse under the CK Hutchison umbrella, and the London-based investment firm, Covalis Capital. The sheer scale of these bids highlights the lucrative, yet precarious, nature of the Thames Water investment opportunity. The urgency of the situation is further underscored by the recent departure of Thames Water's CFO, Alastair Cochrane. Cochrane, who recently served as interim co-chief executive, is leaving at a pivotal moment, just after the company secured a £3 billion emergency debt bailout from existing creditors following a crucial court ruling earlier this month. This bailout, secured only after an appeal to the Court of Appeal, was a desperate measure to prevent an immediate slide into special administration, a euphemism for temporary nationalization. The implications of such a move are far-reaching, raising concerns about public control and the potential for increased water tariffs. The looming partnership with KKR, the private equity firm that infamously inspired the book Barbarians at the Gate, a chronicle of corporate excess, is not without its critics. The deal raises important questions about the long-term implications of private equity ownership for a vital public utility. Will KKR's involvement prioritize shareholder returns over crucial investments in infrastructure upgrades? The possibility of significant job losses or service cuts cannot be discounted, especially given KKR's reputation. Adding to the complexity is the well-documented state of Thames Water's aging infrastructure. A recent BBC documentary highlighted the deteriorating condition of the company's assets, raising serious concerns about water quality and the potential for future disruptions to service. These issues are not just financial, they are fundamental to the health and well-being of millions of Thames Water customers. The deal with KKR, therefore, is not simply a financial transaction. It's a bet on the future of a critical public service. The negotiations are progressing rapidly, with a definitive agreement expected by the end of June and completion anticipated in the second half of the year. The next few weeks will be crucial, determining not just the fate of Thames Water, but also setting a significant precedent for the future of private equity involvement in essential public services in the UK. The looming question is whether KKR's involvement will be a rescue, a lifeline, or a harbinger of further challenges for Thames Water and its customers. The consequences of this high-stakes gamble will be felt for years to come. The future of Thames Water, and arguably a significant portion of the UK's water infrastructure, hangs precariously in the balance. The deal, once finalized, will be meticulously dissected and debated, with its impact echoing across the nation. The watchful eyes of regulators, politicians, and the public will be keenly focused on the unfolding events, scrutinizing every detail to gauge whether this is truly a rescue or the beginning of a new chapter of uncertainty and potentially even greater challenges.